Hello, money magnets. Good morning, master traders. We're looking at a 15-minute chart of the SPY here. You guys can see this ticker symbol popped up. What caused it to pop up? Do we have some news? Was it going on? Is the tariffs? The tariffs, they're all fixed. Any fundamental reasons why the market's going up? I can't tell you about the fundamental reasons. I haven't heard any. But I can tell you about the price action, okay? Now, in yesterday's morning video, Uncle Chartis posed the question, can this resistant level hold? The resistant level that I was referring to, if you watch the video, was 520. I also wrote it in my Discord for my general lean. 520 is the equilibrium level, okay? What that means is, as long as below, I wrote here, Uncle is bearish. Okay? And I put, if 520 is recaptured, bears would be at risk of a false breakdown setup. Guys, pretty much in translation, to translate it and keep it simple. 520 being the equilibrium level, I was bullish above it, and I was bearish below it. Okay, now why was this 520 level so darn important? Let me go to the daily chart. Let me remove all my levels here and the moving averages, okay? Just a naked chart, just price action and candlesticks, okay? You guys can see right here, we had an inside candle set up with the mother candles low around 520. Okay, it was around 520. Let me turn it to yellow. Now, based on this setup, for it to be bearish, breaking down the mother candle's low, which was April 16th candle right here, would be needed. And we actually did that on April 21st, as you guys can see right there, April 21st candle. We broke down 520. What was the low of that candle? 508.4. Gave us a nice, almost a $12 drop to the downside when we broke down that low. So I said for yesterday, 520 was the equilibrium level because it was based on that inside candle setup. So below it kept the breakdown intact, but recapturing it would give bulls a shot at some upside. It would be, like I said in my Discord, a false, at risk of a false breakdown setup. False breakdown setups are bullish, guys. Okay? So yesterday, like I would say, we traded on the 15-minute chart. We identified the support and resistance levels, aka the pivot levels. On the daily chart, that's where we identify them on. On the daily chart, no lower than a 4-hour chart. And then when we want to trade it intraday, we take it to a 15-minute chart, no lower than a 15-minute chart. You can trade it on 30-minute or the 1 hour. 15-minute charts to 1 hour charts are the best time frame to trade for intraday, in my opinion. And you look here on the 15-minute chart, because I go no lower than a 15. That orange line is my 520 level. We cleared it, guys. Cleared it. Okay? And I wrote in my Discord because I sent updates throughout the day. 520 cleared. And if 521.5 cleared next, higher targets would be in play. Look what happened. We cleared 520. The next one was 521.5. Cleared that. The next one was 523. Cleared that. And it just gave us a bounce, a beautiful bounce to the upside, going as high as 529-ish before we had the beautiful pullback. So the false breakdown setup triggered this bounce to the upside. And then we had this beautiful pullback triggered by a false breakout, guys. Okay, I had a 528.6 level. We cleared 528.6 on the 12:15 candle. Next candle, we broke back below it. And it gave us a nice drop going as low as what? 521.7-ish, almost to my 521.5 level. Beautiful drop to the downside before we bounced. Recaptured 523. 523 was a fib level. I bring back all my levels. Yeah, it was a fib level on the daily chart. So intraday, before the end of the day ended, whatever, we recaptured 523 and it led to a beautiful bounce to the upside. And now here we are gapping up. Okay, there is no predictions going on in Uncle Charters' community. Okay, I mean, we do talk predictions for fun, and we do follow a veteran trader who makes predictions. You know, that's Discord exclusive content for tier 2s and higher. But overall, when we are trading, we following the price action, guys. Okay, we're following the price action. Uncle Charter said 520 is the equilibrium level. So when it cleared, that was the trigger to go long. Now, if it would have stayed below 520 and broke down 518 or 516, Uncle would have went short. Unfortunately for the bears, the market makers decided to side with the bulls yesterday, and it looks like they're continuing the pain. Okay, so now that you guys know how to use the levels, I want to give you guys the new levels for today. We are gapping up. The 20 daily moving average is around 538.5-ish. All right, which makes next resistance at 540. Well, it's actually above 540 now. It's gapping up above the 20 daily moving average. Amazing. That actually makes next resistance at 542. And then I do have a fib level at 543.4. Okay? So, listen, I'm going to give you guys the bull case and the bear case, and I'm encouraging you guys to react to the price action the same way I show you guys on the 15-minute chart. Okay? And if this is your first time, or it's still your first few times trying this, it's going to be a little bit uncomfortable, but you'll get better at it the more you try. Don't give up. And for all the people that's been doing this, you guys can see with your own eyes. It works. Okay? It can work. So, if we clear 542, if we clear 543.4, more upside is possible. Okay? 545, 548. I have a fib level at 549.6. And it also happens to be this blue downtrend line that I have here. This blue downtrend line represents the downtrend that we had since February. For this correction or this downtrend to truly end, a breakout of this trend line is needed. It has 3 touches already. A 4th touch would be around 549.6. A breakout SPY would need to get above that level. All right? But we cannot get there unless SPY can stay above 538.5, which is the 20 daily moving average. Staying above 540. And then clearing for the triggers to go in calls, you need resistance levels to clear. 542 and 543.4 fib level must clear, and that should send us higher. That is the bull case scenario. Now the bear case, for this to be a gap and crap, we need to break back below 540 to start, of course, but the 20 daily moving average is critical. It's an important pivot level, it's an important moving average. 538.5 must fail as support. Okay, it must fail. And as a matter of fact, the 20 daily moving average is sloping down. So it could drop down by the time market opens. It could be as low as 538. So matter of fact, watch that 538 level. I have a fib level at 536.3. If that level fails, 535, 533 or lower incoming. The gap is all the way at 527-ish. Okay, look to short if we get back below the 20 daily moving average. Please look to your charts, turn on the 20 daily moving average, look at what level is at, and if SPY drops below, I'm thinking 538, we go short. Okay, below 540 and 538, we go short. Breaking down 536.3, which is a fib level that I have, would be bearish. Follow through. Multiple gaps to the downside that needs to be filled right now. Okay, but it will start with losing the 20 daily moving average, and that's your sign that this is a gap and crap. All right, so we got the bull case and we got the bear case scenario. You guys got all my pivot levels. Now it's on you guys to trade it unbiasedly. Now moving on to triple Q, also gapping up. I have a fib level at 556 and I have a fib level at 460. Watch that range. All right, if triple Q can pop above 458 and 460, I would favor more upside. 465, 466.5 or higher would be my target. But if we break down 456, this is a good sign. It's a gap and crap. Where are my moving averages? The 20 daily is around 455.3. So we can watch that as well. It'll probably slope down to 455. But either way, below the 20 daily moving average, it's bearish. Fib levels at 456. You can watch that 20 as well, but I do have a support at 454 and then another fib level at 452.8. If those levels fail, we are dropping to the downside. Okay? Below 456 and the 20 daily moving average, Unco is bearish, and I favor this to be a gap and crap. I will only trust more upside if 458 and 460 can clear to put 462, 465, and 466.4 all in play for triple Q. NVDA going for a gap up as well. If 105 clears, 107, 108.6 is in play first, and maybe we can go fill the gap around, I'll say around 111 is the gap fill. Okay? If this is a gap and crap, 105 must hold, 103.5 and 102 must fail to put the fib level of 100.5 back in play, and then 99, 97.8, and 96 below. Tesla. Oh. They reported earnings yesterday. And yeah, we're gapping up, guys. Incredible. But you know what? On to the next setup. I have a fib level at 254.5. Okay, guys? That's the equilibrium level. If above, we're bullish. Below, pullback time. Gap and crap time. Okay? If we're above it, 254.5, I have the next resistance level 256, 258, and 260. If it clears, 262 and 263.3 is in play. Now, 263.3 is important because it's a fib level, but also based on this little blue downtrend line that I have. 3 touches, a fourth touch would be at 263.3. A breakout would be bullish, okay? It would be bullish at least for the short term. Now, if we want to get a pullback, if this is a gap and crap, 254.4 and 253 must fail to put 250, 247, and 245.6 back in play. Below 245.6, we can go for the gap fill around 238-ish. All right? Look to short if 254.4 and 253 fails. Look to long if 256, 258, and 260 clears for a test of 263.3 and above 263.3, breakout mode. All right, guys, that is what I got for Tesla. Coin with the beautiful pop to the upside. I think I mentioned in yesterday's video, guys, if we can clear and get above that 179, 180 area, I think we could break 183 and 184. And it looked like it aged well. But most importantly to me, it's not about, you know, my opinions aging well. I just hope people made money out of it. Otherwise, what's the freaking point? So hopefully you guys made some money from this, okay? But let's on to the next setup, right? Next resistance I have is, I have a fib level at 199.8, but I'm gonna go with 200, guys. That's what I'm gonna go with. A nice even number. 200 is next resistance level. If it clears, I definitely believe we could pop up higher. 203, 205.5. Well, actually 205, not 205.5. So 203, 205, 207, and we still got a gap fill around 215-ish area, guys. I think we can go fill them. But 200 must clear. Now, if it's a gap and crap time, what do I got? Yeah, 197 and 195.5 must fail. Those levels fail, guys. To the downside we go. 194, 192, 190, 188.3 or lower would be in play. There is a gap all the way down to 175. That's a long ways away, but not possible unless we break down support level. 197, 195.4, and 194 all must fail to kick off a gap and crap. Otherwise, 200 clears, we're going to keep on going up. And all I'm asking you guys to do is just follow the price action. Don't put your will into it. You're just here to make some money and move on. That's it. That's it. VIX. I mentioned I couldn't get bullish on VIX unless it can get back above that 31.4 level. They tried yesterday, but they failed. Now they're breaking down the next support level I have, which is around 28. If it stayed below 28.2, I have 27, 25.7, and 24 are targets. I trust no bounce unless we get above 28.2, 30 and 31.5. Otherwise, it's looking bearish. All right, guys. Thank you, guys. Master traders, money magnets. I love y'all. Remember to trade this sheep style. That's the best style. Unbiased, up or down, all around. It doesn't matter because we going to the mountaintop. I love y'all. Peace.